Hey traders, welcome back to Expert Trade Ideas. I'm your host Jen, bringing you today's pre-market breakdown and our top 5 trading opportunities for Wednesday, June 25th. If you're new to day trading or looking to improve your trading strategies, you're in the right place. We're going to break down exactly what the market is telling us this morning and give you actionable setups you can use today. Market overview. Let's start with the big picture. Right now, we have what I call a coiled spring market. The ES and NQ futures are sitting flat in pre-market, but don't let that fool you. This isn't calm, this is compression. We're sitting on higher timeframe inflection zones with no range expansion overnight, which tells us we're in a compression phase that's about to break. Here's what's happening beneath the surface. The DXY dollar index is sitting below 100 after hitting May highs, which is easing USD pressure on risk assets. The 10-year Treasury yield has fallen from 4.52% down to 4.296%, creating a risk-friendly environment. Smart money is rotating back into bonds, and historically, equity flows follow bond accumulation with about a 1 to 2 session lag. The volatility picture is critical here. The VIX has been slowly declining from 17.48 to 17.26, but more importantly, the VVIX has been crushed from 108.86 down to 92.29. This means volatility sellers are in complete control, and when that VVIX-VIX spread collapses like this, it leaves the market exposed to sharp directional moves. We're expecting a high-speed breakout within the next 1 to 2 sessions. Now here's the warning. Market internals are fragile. The advanced decline line is at plus 1217, which means advancing issues are outpacing declining issues, but barely. The tick for the New York Stock Exchange is at negative 63, while Nasdaq tick is at positive 25. There's no real uptick momentum here. This fragility means any downside move will accelerate faster than upside moves. For beginners watching this is exactly the kind of market environment where patience pays off. Don't front-run the move. Wait for confirmation through volume and volatility signals before committing your capital. Top 5 trading setups. Now let's get into our 5 best trading opportunities based on pre-market volume and technical setups. First up, NVIDIA at $148.68. This stock has massive pre-market volume at 1.06 million shares. It's gapping up just 0.07%, sitting above both its volume-weighted average price at 147.4 torn and well above its Camarilla pivot at 129.81. The setup here is a breakout on volume confirmation. If NVIDIA holds above $148, we're looking for potential runs to 150, 152.25, 154, and 156.75. If it fails below the 8-period exponential moving average at 147.43, we'll look for fades down to 146.50, 145.25, 144, and 142.75. Keep your risk tight around that VWAP at 147.14. Second, Pony AI at $14.45. This one has 876,000 shares of pre-market volume and is showing a hammer reversal pattern after gapping down 0.83%. It's trading above VWAP at 12.89, but still below its Camarilla pivot at 16.41. This is a classic trap reversal setup. If it holds above 13.85, we're targeting 15.25, 16.65, 18.05, and 19.45. The downside targets if it fails below the EMA at 13.27 are 12.50, 11.70, 10.90, and 10.10. Risk management around the VWAP at 12.89. Third, Robinhood at $84.48. Pre-market volume is 533,000 shares, with a bullish gap up of 1.06%. This is a gap-and-go setup, trading well above VWAP at 80.77 and above its Camarilla pivot at 59.61. If it holds above $84, we're looking at upside targets of 87.25, 89.50, 91.75, and 94. Downside if it fails below the EMA at 81.87 would be 80.50, 79.25, and 76.75. Again, manage risk around that VWAP level. Fourth, Tesla at $31.49. Volume is lighter at 182,000 shares, but this is setting up as a VWAP reclaim breakout. It's currently trading below VWAP at 344.28, but above the Camarilla pivot at 328.39. If Tesla can reclaim and hold above the EMA at 342.21, we're targeting 346.50, 349.75, 353, and 356.25. If it fails below $34, look for fades to 337.50, 335, 332.50, and 330. Risk around the VWAP at 3344.28. Finally, Coinbase at $353.72. This crypto play has 199,000 shares of pre-market volume and is showing momentum continuation. It's trading well above VWAP at 336.71 and significantly above its Camarilla pivot at 238.99. This is a momentum continuation setup. If it holds above $352, we're looking at aggressive upside targets of 368.50, 383.25, 398, and 412.75, given its high volatility. Downside if it fails below the EMA at 344.25 would be 335, 325.75, 316.50, and 307.25. Trading strategy for beginners. For those new to day trading and futures, here's your action plan. We're in a wait-and-see mode until we get our confirmation signals. Watch for the volume differential to turn positive, confirming institutional money flowing into advancing stocks. Monitor for a VVX reversal showing volatility sellers losing control. And watch for Nasdaq tick readings above positive 400, indicating broad-based buying pressure. Don't chase the initial move. These compression setups often fake out early participants. Wait for the second wave with volume confirmation. The NQ futures are showing slightly better internals than the ES, so favor Nasdaq-related stocks like our NVIDIA and Tesla setups. Remember, this market's internal fragility means any breakdown will be swift and violent. Keep your position sizes appropriate for the volatility and always have your exit plan ready before you enter. Closing, that's your pre-market breakdown for today. These 5 setups align perfectly with our institutional accumulation theme and the tech leadership we're seeing in the futures. Remember, patience is key in these compressed volatility environments. If you found this analysis helpful, make sure to hit that like button and subscribe for daily pre-market breakdowns. And if you're serious about taking your trading to the next level, we're offering summer coaching with a special discount right now. Head over to www.expertradii.com to learn more about our comprehensive training programs. Trade smart, manage your risk, and we'll see you tomorrow for another market breakdown. Until then, good trading, everyone.